Welcome to the Wednesday edition of Tech Stocks Daily, where we slice through the tech world's freshest updates, like a pro chef handling sushi. Today we dive into CrowdStrike's unexpected stock dip despite stellar earnings, and Nutanix's bullish climb with AWS that's got investors buzzing. Meanwhile, we'll unravel Iris Energy's eco-friendly Bitcoin mining achievements and explore how Apple's financial metrics are affecting its market standing. With numbers flying across NASDAQ and big moves in cloud and cyber, you won't want to miss these thrilling market tales. Buckle up, it's tech stock excitement, good vibes only. Today we're diving into what's happening with CrowdStrike Holdings, the cloud-based cybersecurity titan that's been making waves on the NASDAQ. Buckle up, because CrowdStrike's journey is a roller coaster, and today was no different. First off, let's talk numbers. In their fiscal third quarter of 2025, CrowdStrike reported a whopping $1.01 billion in revenue, a solid 29% increase from the previous year. They didn't just tiptoe past analyst expectations. They did a full-on sprint with adjusted earnings per share hitting 93 cents, significantly surpassing projections of 81 cents. Annual recurring revenue also soared to $4.2 billion, marking a 27% increase. It's like CrowdStrike went all Hakuna Matata on the cybersecurity market, showing no worries for the rest of their days, right? Not quite. Despite these impressive results, the company's stock saw a dip of around 5 to 6% in pre-market trading. You're probably wondering, what gives? Well, it seems the investors were just mildly impressed, like a parent who expected more than just peas for dinner. CrowdStrike did raise their full-year guidance, but not as much as some optimists hoped. Their forecast for fourth quarter revenue is between $1.029 billion and $1.035 billion, which is good, but didn't push the wow buttons investors were itching for. Now let's rewind to the glitch in CrowdStrike's matrix. Back in July, they had a software update mishap that caused some global IT headaches. Yet instead of drowning in chaos, they swam to the surface like champions. The recent numbers show that the company's growth didn't stumble as a result. In fact, module adoption rates are climbing faster than a nerd at Comic-Con racing to the Star Wars booth. More customers are purchasing multiple modules, which has bolstered their business. In reaction to their Q3 magic trick of pulling revenue rabbits out of hats, analysts are having a party of mixed feelings. Needham dialed their bullishness up to 11, raising the price target from $360 to a whopping $420. Meanwhile, HSBC decided to play it cool, downgrading to $347. What's really intriguing here is CrowdStrike's resilience. Despite the market's met reception today, the company is holding strong above its 20, 50, and 200-day moving averages. It's like your tech-savvy cousin who still manages to keep his cool during family Zoom calls while everyone else fumbles with the mute button. The road may look rocky in the short term, with a disappointing forecast compared to Wall Street's grand expectations. But listen, in the grand landscape of cybersecurity where threats are as common as cat memes, CrowdStrike is sitting on massive potential for growth. Even if the short-term hiccup has spooked some investors, don't count them out just yet. This saga of CrowdStrike is far from over, and it continues to underline how cybersecurity companies must navigate hurdles while keeping the big picture in view. Stay tuned, because the future is cyber bright. All right, tech enthusiasts, let's dive into why Nutanix is making waves in today's news cycle. Nutanix, the veritable powerhouse in hybrid multi-cloud computing, seems to be on a roller coaster of innovation and financial ascendancy that has Wall Street applauding from the stands. First up, brace yourselves for penny-pinching glee. Nutanix reported its first quarter fiscal 2025 earnings, and the numbers are looking more lucrative than a Black Friday electronics sale. They posted non-GAAP earnings of 42 cents per share, a figure that casually leapfrogs the Zacks consensus estimate by a hearty 35.48%, pretty much the data equivalent of a mic drop. Revenues also got a boost, swelling by 16% year over year to reach a hefty $591 million. Higher revenues are primarily thanks to Nutanix's expanding partnerships, clientele, and an enthusiastic embrace of its shiny new capabilities. They weren't just coasting, they added 630 customers in the quarter alone, cruising comfortably with an 87.5% non-GAAP gross margin to boot. Now for the stock market stands. Nutanix stock is high on momentum. In just a week, NTNX shares are up by an admirable 5.25%. The company isn't just about instant success though. Over the past 3 months, the stock has leapt up by 16.96%, and over the last year, brace yourself, a whopping 78.6% increase. This kind of prowess put a gleam in the Zacks momentum style score eye, giving Nutanix a well-deserved score of B. If that doesn't make the ticker callers beam, not much will. But wait, there's more. Never one to rest on its laurels, Nutanix is charting new courses and territory by expanding its strategic alliance with AWS. This thrust into AWS territory will allow clients to migrate seamlessly to Nutanix clusters on AWS, further marking its territory in the distributed hybrid infrastructure field, where it's already named a leader in the illustrious 2024 Gartner Magic Quadrant. As if strutting its earnings prowess wasn't enough, the company sure knows how to plan a step-ahead future. Looking forward to the second quarter of fiscal 2025, Nutanix estimates revenues to hit somewhere between $635 million and $645 million. With operating margins forecasted at a cozy 20-21%, the folks over at Nutanix HQ seem to be sporting wide smiles. In conclusion, Nutanix has pulled off a charming triple whammy: stunning quarterly results, enviable stock momentum, and bolstering partnerships that aim to redefine the cloud computing paradigm. For investors, that's a buffet of opportunity. For the tech world, a whirlwind of inspiration. Here's a company not just focused on growth, but on orchestrating strategic operas of power and influence within its hybrid multi-cloud domain. Keep your eyes on Nutanix, folks, because this is a tech saga full of plot twists worth watching. All right, tech aficionados, let's dive into today's thrilling saga with IRES Energy, your friendly neighborhood Bitcoin mining company that seems to be energizing more than just its data centers. So why is IRES Energy lighting up the tech headlines today? Buckle up. First off, IRES Energy reported some electrifying first-quarter results that have caught the attention of analysts and investors alike. The company mined 813 Bitcoins in the quarter, pulling in revenue of $49.6 million from its Bitcoin endeavors. To put that in perspective, their cryptocurrency hustle is really paying off. IRES Energy earned a nice additional $3.2 million from its AI cloud services, marking a notable 28% increase quarter over quarter. It's like finding an extra candy bar in the vending machine when you were just expecting one. With these promising results, the financial bigwigs decided to step up their game. Analysts from several Wall Street firms, including Canaccord Genuity and H.C. Wainwright & Co., have raised their price targets for IREN stock. You can imagine them frantically adjusting their spreadsheets with a mix of excitement and caffeine-induced adrenaline. But wait, there's more. IRES has announced a supercharged growth trajectory, aiming for a 31 exahashes per second milestone, which translates to mining a lot more Bitcoin in non-nerd terms. Now, their ambitious goal takes them to a spectacular 50 expresses by the first half of 2025, an advanced timeline from their previous goal for later that year. It's like setting your GPS to warp speed. This is sure to interest anyone watching the crypto space closely. IRES Energy's strategic powerhouse is its commitment to environmentally conscious Bitcoin mining. They don't just mine Bitcoin, they do it with renewable energy. It's like harvesting your own gourmet veggies to craft a Michelin star salad, except with more computers and less kale. This green angle might just be what attracts more investment dollars in a world increasingly concerned with sustainability. Speaking of investments, IRES has been creating quite a buzz in the options market. The whispers of big, mysterious whales making bold trades signal bullish confidence around IRES's stock. To break it down, 60% of traders were bullish, placing significant call options, whereas bears were undeniably in the minority. It seems that investors are seeing more shiny digital coins than caution signs on IRES's horizon. And to wrap this all up in easy-to-grasp delight, shares of IRES Energy jumped over 9% following these gleaming quarterly results and analysts' bullish revisions. As the company continues to ride the green wave while mining the virtual gold that is Bitcoin, it certainly looks poised for some bright on-chain future days. Stay tuned as we keep an eye on whether IRES Energy will keep dazzling us like a tech-savvy superhero, striking the balance between powering the blockchain and preventing any eco-code red. Ladies and gentlemen, today we're diving deep into the fantastic fruit-themed universe that is Apple. Now, I promise this isn't a session of what will Apple do next, but hold on to your iPhones because Apple's moves are making the headlines. First up, let's peel back the layers on Apple's financial performance. Investors and Apple aficionados alike are always eager to know how the tech giant stacks up against its competitors. An article revealed an extensive industry comparison of Apple's performance, which is kind of like comparing apples to, well, more apples if you will. Analysts have been eyeballing Apple's metrics and have a mixed basket of insights. On the good side, Apple sports an impressive return on equity of 23.83%, far exceeding the industry's average. So it's clear that Tim Cook's fruit stand knows how to turn a profit with its current assets. However, things aren't all rosy. Apple's price-to-book and price-to-sales ratios suggest that our beloved tech titan might be overvalued, with Apple's PB standing at a whopping 62.39. That's a lot of dough for the donuts they produce, or in their case, silicon wonders. It looks like Apple might need to start doing its own version of hot yoga because their revenue growth of 6.07% seems lethargic compared to the industry's blockbuster 167.6%. Now, onto a slightly juicy piece of news: dividends. Who doesn't love some fruits for their capital? Investors stoked about Apple's rising popularity might want to keep an eye on their 0.43% dividend yield. It's kind of like finding that $5 note you forgot about in your pocket, small but satisfying. Investing approximately $1,410,360 could net you that sweet $500 a month from Apple's dividends. Of course, that depends on their stock staying trendy, a task they've excelled at since the iPod, for those who remember when we still had a separate thing for music. Anyway, this tidbit just goes to show how Apple's presence, almost as primary as oxygen in the tech world, continues to intrigue, fascinate, and occasionally bewitch us all. What do you make of Apple's financial trajectory and these nuggets about their dividend proposition? Is this a company you'd park your investment dollars with, or are you eyeing other trees in the tech orchard? I'd love to know your perspectives, so dish out your thoughts in the comments. Let's keep this tech dialogue thriving, just like Apple's share price hoping to thrive. Happy investing, and may your returns be as bright as the Apple logo. Don't forget, My virtual doorstep is always open for your amazing comments. What are your thoughts? Let those keyboards pop with feedback and ideas. All right, tech investors and enthusiasts, let's get into the nitty-gritty of one standout story from today's whirlwind stock report. We're shining the spotlight on Nutanix. Given the data we've got, would buying, holding, or selling make sense? Drumroll, please. Based on today's performance and outlook, I'd be leaning towards a buy for Nutanix. Why? Let's break it down. 1. Strong financial results. Nutanix not only exceeded expectations with its earnings, outpacing estimates by a light year, but it also showcased a steady increase in revenue year over year. This kind of performance is like the tech world equivalent of opening a surprise box of donuts and finding they're all filled with Nutella, unexpectedly delightful and rewarding. 2. Impressive stock momentum. They've been on a bull run with their stock up nearly 17% in the past 3 months and almost a whopping 79% over the last year. It's like that one fitness tracker everyone can't stop gushing about because it's actually delivering results. 3. Strategic partnerships. Expanding its alliance with AWS indicates Nutanix is not just sitting on its laurels, but actively charting forward-thinking paths. This not only expands their market reach, but also solidifies their presence in the burgeoning hybrid multi-cloud domain, a savvy move as more clients tap into cloud infrastructure. 4. Strong outlook and guidance. Their projected Q2 2025 revenue between $635 million and $645 million, with comfortable operating margins, suggests a company not just aiming high, but setting realistic, profit-boosted targets. Now, this isn't just an invitation to sprinkle Nutanix stocks like confetti in your portfolio. Every investment journey is unique, and with tech stocks, the landscape can shift rapidly. Imagine trying to use a dance video tutorial during an actual wedding. So always ensure you do your own research, consult with financial advisors, and understand your risk tolerance before making any investment decisions. After all, your portfolio should be as reflective of your strategy as it is resilient to market surprises. That said, folks, keep those portfolios agile and let your investment instincts dance to your carefully crafted tunes. Today's tech market has been buzzing like a freshly shaken soda, with CrowdStrike dazzling in the cybersecurity arena despite investor jitters, Nutanix power surging through the cloud with impressive financials and strategic moves, and IREN Energy mining Bitcoin like there's no tomorrow while maintaining an eco-friendly edge. Meanwhile, Apple continues to mesmerize with its financial stability and strategic dividend plays, even as it faces valuations that might leave you breathless. If you found today's Tech Tales as exciting as a software update that actually delivers, be sure to give us a thumbs up, subscribe for more tech tidbits, and share this video with your fellow tech enthusiasts. And don't forget to join us again tomorrow for another whirlwind tour of the tech market. Stay tuned and keep those tech vibes thriving.